My name is Tian Liu. I'm a accounting student from UNSA, and today I will talk about the first question of impact of changes in accounting policy on lease accounting, where the shareholders be willing to see more lease assets and liabilities to be recognized on balance sheets. So, to answer this question, we need to understand the current accounting policy and what changes were the new policy bring. So, under the current accounting standards, leases are classified as operating leases and financial leases. The operating leases are treated as expenses and were not reflected on balance sheets, while the financial leases are treated as assets with certain amount of liabilities and will be reported on balance sheet. The majority leases are not reported on balance sheets. Under current policy, even though the rights and obligations brought by the leases match the definition of assets and liabilities. Also, the managers have incentive to reduce the lease assets and liabilities because there are certain benefits that reducing the lease assets and liabilities will bring. First of all, it will increase the return on asset. As we all know that return on assets equals to total return divided by total assets. So reducing the total assets will magnify returns on assets. Secondly, reducing the lease liabilities will affect the debt-equity ratio or liquidity, and the manager will use this to make them look more desirable. Thirdly, it will increase reported profit when depreciation and interest expense exceed payment. Lastly, the manager will reduce additional recognitions and disclosures of lease assets and liabilities. Due to these benefits, the manager will tend to misclassify the financial leases as operating leases, which will reduce the reliability of the financial report. Apparently, the shareholders are satisfied about the current policy. First of all, it is unable to make a full disclosure of these assets and liabilities, as the financial reports under the current policy cannot provide the information that users require. As mentioned above, not only most lease transactions are not reported on balance sheets, but also it will encourage the managers misclassify the financial leases as operating leases to make the financial statements and related financial data appear better than actual situation. Second, the classification of leases lack the comparability and undue complexity. This is because the distinction between financial leases and operating leases are critical that the user will need to take an educated guess in order to estimate the hidden leverage from leasing based on the limited information from financial reports and separately applying arbitrary multiples. So the new accounting policy proposed to remove the requirement of classification of financial leases and operating leases, and instead develops a new model to recognize the rights from lease to use an asset and the obligation to make a payment as a liability. As a result, more lease and results and the liabilities will be recognized on balance sheet. Obviously, the shareholders are more willing to see this, and it will provide a more reliable and faithful information. That's my presentation today. Thank you very much.